So there are 4 different market orders. I will say that there are 5 different types of market orders. Okay, so first of all, we have the instant execution. The instant execution just means you want to buy or sell at that point in time. You want to sell or buy at that given price at that particular time. You want to press the execute button at that particular time. That is instant execution. So once you press the buy or sell button, you'll be quoted at the normal place. You already understand. Okay, so they'll just place your trade immediately you press the buy button. Okay, so that's for the instant market execution. Then we have the buy stop. We have the buy stop, and the buy stop is an order that is placed above the current market price. So you are saying that you want the market to get to that particular level and break below it. When it breaks above it, then your order will be triggered, and then you will now be in the trade. So you are not expecting price to keep pushing further up. You'll be expecting price to keep pushing further up. So buy stop order is an order you place above the current market price, that you are expecting the market to get to that particular price and then to keep going up. You will keep buying. Okay, so that is for the buy stop. And then we have the sell stop. So it's just opposite of the buy stop. So if you don't buy, you are selling, right? So sell stop order is the order you place below the current market price. So you are anticipating that you want price to get to that particular point, that particular price, before you see the market start dropping. So you are saying that when the current market is at, perhaps, let's say the current market is at 100, for example. Let's say the current market price is at 100. So your sell stop will be below 100. So let's say your sell stop is equals to, your sell stop will not be like 90 or 95. So you're saying you want price to keep going down to even probably 0. So when price gets to 95 or it gets to 90, which is your stop order, you will be triggered and then you'll be in the trade. Then you are now expecting price to keep going down to maybe 80, 70, 60, 50, thereabout. Okay, so that's for the sell stop. And then we have the buy limit. The buy limit is placed below your current market price. So you are waiting for price to get a particular point, and when it gets to that particular point, it will now reverse and start going back up. The market to sell to a particular point, you want to buy at a very cheap price, right? So you put your buy limit order below where is the cheapest. So let's say price is at 1.28550. So you want price to be at 1.28500. When it gets to 5.28500, you're expecting price to keep now reverse back to the upside again. Okay, so buy limit is an order you set below the current market price. Okay, and is the opposite of the sell limit order. So the sell limit is the order you place above the current market price. So you're expecting price to get to a level and then it will start dropping, it will start selling. You want it to go up a little bit before it starts dropping. Okay, so that is just about it on the market orders, and it's very, very simple. We'll go to our MT5. So I'll show you how to, I'll show you each of these orders and how you can set them. Okay, so this is our MT5, right? So this is our MT5. So you come here, go to trade, hit the plus button, and then you see the market execution, the buy limit, the sell limit, is buy stop, the sell stop, the buy stop limit, and the sell stop limit. So I'll be explaining the buy limit, the sell limit, the buy stop, and the sell stop, because the market execution is just what, like if you click on the buy right now, it's going to place a buy position for you. So that is just the instant one, right? So when you go to buy limit, what is buy limit? How do you put your buy limit? So you look at the current market. A buy limit order is an order you place below the current market price. So for example, right now the market is already going up. So what you did was that you just come here, your order should be somewhere around this place, somewhere around here. So you are expecting price to get to this point and then start going to the upside. You expected price to come to this point before it start going up, and right now it's going up. So what you will do is that you just take the order from here, which is 1.28518, and then you go here, hit the plus button. You see where it's written price, stop loss, and take profit. You put the price here, of which it was 1.28518. So when price get to this point, it's expected to bounce back for a reversal. So a buy limit order is an order you place if you're expecting a reversal when it gets to that particular price, for a reversal. Okay, so after putting up the price, you also put your stop loss. After you calculate your stop loss, put your stop loss, and then you take profit, and then you place the order. Okay, so let me place this order right now and look at the market. So right now you can see here it's written, you see where it's written buy limit. So when price comes back to this place again, I'm expecting it to keep going again up. I'm expecting it to keep going to the upside. Okay, so that's for the buy limit. I'm going to delete this, and then we'll head on to sell limit. So sell limit is just the opposite of buy limit. So what you do is that you place it above the current market price. So this is the current market price, 1.28600. Then you will now put your sell limit here. So you want price to get to 1.28630. You go here, put your plus button where it's written price 1.28630. Okay, and you put your stop loss, you put your take profit. So when I do this, you come to this place, you see sell limits order is being placed. So when price gets to this point, 1.28630, I'm expecting it to start dropping back to the downside. I'm expecting it to keep coming to the downside, like dropping back down. So that's for the sell limit. So how about the buy stop? Buy stop is an order you place above the current market price. So what you are expecting here is that you place your order above the current market price. So the current market price is at 1.28599. So you place the order above it. You just place the order above it. So what you are trying to say is that when you want price to get to this particular point, to 1.28623, and keep going up, it will just keep going to the upside. Okay, so the same thing for the sell stop. You place it below the current market price. So the current market price here is for 1.28599. So you place your sell stop below it, anywhere you want price to get to before you expect to drop. So when price start dropping to this side, now it gets to 1.577, you're expecting it to keep going down and down and down. Okay, so I hope you understand the market orders, and you can rewatch the video over again to fully understand it. Okay, and then just test it on your MT5 or your MT4 to know how it will, to just familiarize yourself with it. Okay, so thank you for watching, and then I'll catch you on the next video.